First of all, I want to say that we're equally worried about high inflation and slowing growth. It's not as if growth slowdown is not a worry for us. We are worried, and we believe that the Reserve Bank must respond to that. But we also need to restrain inflation. See, we expect that inflation will rise further before it comes down in the fourth quarter of this year. So we need to time and calibrate our policy action to the inflation trajectory. First of all, CRR is expansionary, but that expansion is neither automatic nor immediate. Okay? You know all the reasons. It's not automatic because it depends on credit creation, and that credit creation takes time, and that credit creation cycle could get interrupted at any point of time. So CRR is less expansionary than people think. Normally people multiply the 75 billion by 5 and say that you released 850 billion rupees into M3, but that doesn't happen immediately. Okay. It takes several credit cycles and may not happen in full. Okay. So it's not as expansionary as you think. Second, there are a number of factors which are constraining liquidity. Structural, the wedge between deposit and credit growth, and cyclical factors or temporary factors such as the festival demand and the build-up in the government's cash balances. Our assessment was that both the structural and the cyclical factors will take time to resolve. Maybe the next few months. At the same time, we wanted to ensure that liquidity is comfortable so that at the current repo rate, the transmission does take place. Yes, to the extent that it enables them to do so, we expect that there is a greater room for banks to cut their lending rate now than before the CRR cut. And we expect that lending rates will be cut, especially for those sectors of the economy where there are supply constraints. I don't think you should read that as a conflict resolution mechanism or a conflict resolution package. You should see this as Reserve Bank's response to the current growth inflation dynamics and our best effort to support flow of credit to productive sectors of the economy, even as we restrain inflation. Well, it is a matter of concern, and it is a matter of increasing concern. You know the numbers. The NPA level has gone up from 2.9% to 3.2%. Restructured standard assets, they've also been growing. There has been concern expressed that our regulatory forbearance or giving standard asset classification to restructured assets is not consistent with the international best practice, also not in the interest of our banking system. Therefore, we appointed the Mahapatra Committee. They gave recommendations which are all there. But to believe that all restructured assets are going to become NPAs, I think is to take the other extreme view. The slippage ratio from NPAs, from restructured to NPAs has been increasing. That might increase a little more. So the direction of movement, the rate of movement of increase in NPAs and increase in restructured assets is a matter of concern. This is happening because of the economic downturn. It's happening because of not enough tightness or effectiveness in banks' credit appraisal, monitoring, and early recognition of problems. So in today's meeting, we told banks to take care of factors which are controllable. The factors which are beyond our control, we just have to take them as given and manage them. People are right to be questioning us about this, but you know the current status, that we wanted certain additional powers and authority. The to initiate the process of getting corporates into the banking sector. You know the details. We were given to understand that an amendment to the Banking Regulation Act is necessary in order to give us these additional powers. More recently, I've seen reports in the media that the government is considering whether those powers can be given even without the amendment. So we'll have to wait and see. I don't think so. This is a constructive relationship. Sometimes there is disappointment, sometimes there is disagreement. But I don't think it will affect the professional relationship between the Reserve Bank and the government to pursue our shared objectives.